Hi, winners! Look, welcome to Terry's Tips, guys. Get a notebook, get a pen, because today we're going to talk about 6 accounts that you must have as a business owner, as an entrepreneur, as an investor. Guys, this video is literally for everybody, regardless of what stage of building business credit you are at, okay? So in this video, I'm going to explain what accounts you need. I'm going to explain why you need them, right? And I'm going to give you guys the benefits of actually doing this. So what are we specifically talking about? We're talking about building strong business credit profiles and business credit reports, guys. This is like my formula for success that literally I made up myself based on what I'm seeing, lenders are looking for, why you guys are getting denied. So how this is going to help you guys. When you have these 6 types of accounts, I'm going to explain to you the accounts and how many you need. It's going to help you qualify for more business credit, bigger amounts, better funding, better rates, have longevity, right? And a lot of these accounts you can actually get regardless of revenue. So this means that you can actually use this formula, use these 6 accounts, even if you are a startup, if you are a vet, if you are brand new to building business credit. Everybody should watch this a couple of times, take notes, because what's going to happen, I'm going to explain to you, I want to show you how to kind of look at where you are right now, kind of review the list I'm giving you, and then see where there are gaps and plug that information in so you can have better results faster. Come on, somebody, okay? And guys, I'll do my nugget at the end, and my nugget for today is heavy. So make sure you watch all the way through into the end, okay? So for business credit building, 6 types of accounts. So the number one type of account, okay, is you're going to start with some vendor accounts, tier 1 accounts, net 30 accounts. I'm putting that all in one bucket. Vendor accounts, net 30 accounts, tier 1 accounts, okay? And that is the very first type of account that you should have. Now, why? Because you can get those right now, even if you are a brand new business, even if you have bad personal credit, even if you have no revenue. Why would you do that? Because these type of accounts are going to help you have a business credit profile and start to help you have a business credit score, which is going to help you qualify for what? Bigger money, guys. Pause. And when I say bigger money, I'm talking about the unsecured business lines of credit. 50,000, 100,000, 200,000. I'm talking about the business auto loans. I'm talking about the business mortgages. I'm talking about the equipment financing, guys. If you get these 6 type of accounts, right, this is going to help you qualify for the bigger things, to help you kind of build your brand, okay? So the first type of account is have at least 4, look, how many, Terry? At least 4 tier 1 net 30 vendor accounts. I didn't say 25,000, I said 4. Okay, the second type of account is everybody. Look, I'm gonna say everybody. Everybody should have a NAV business boost account. Now, why? Because same thing, you can get it regardless of how long you've been in business. You can get it regardless of revenue, regardless of how if you have bad personal credit or good personal credit, and it reports to the business credit bureaus. Nugget right here. The whole goal, guys, is to do business and have accounts with lenders that report to the business credit bureaus. This will help you qualify for money to actually build your brand, grow your brand, expand all of those things, okay? So your NAV Business Boost is going to be your second type of account, okay? Now your third type of account is going to be a business corporate card. I didn't say credit card. I said a corporate card. So what is a corporate card? A corporate card is like a Divvy or like a Torpago. And I actually recommend those two, Divvy and Torpago, guys. And for some of these accounts, I actually have links in the description of my video. So make sure you check that, okay? And so why am I saying that? Because number one, it's a soft inquiry. Come on, somebody. Everything I do is strategic. So the tier 1 accounts, soft inquiry. NAV, soft inquiry or no inquiry. The corporate cards are soft inquiry. So I'm trying to help you build business credit and preserve your personal credit, okay? Another reason why I'm saying Divvy and Torpago or just having a corporate card is because this is revolving unsecured credit in your business's name, business EIN. That's going to do what? Help you qualify for the unsecured lines of credit, unsecured, business auto loan, unsecured, equipment financing and all those other things, term loans, micro loans. Come on, somebody. Okay, there's a method to my madness. So the reason why I actually say Divvy and Torpago over like a Brex or a Ramp is because some of the business corporate cards have really hefty revenue requirements. So for example, Yeah, Brex is a soft inquiry. Brex is a corporate card, but they also want you to have $100,000 liquid in the bank. So many of you do not have that, or you may not have that right now, or you may be a startup business. So that is not a card that you would qualify for. So start with a Divvy and a Torpago, because those are corporate cards that report to the bureaus that will help you build, okay? Now, a corporate card is revolving, so if they give you, $8,000, you have $8,000 you can spend, but remember, it's like an American Express, meaning that the full balance is due in full at the end of the month. If you charge $50,000, in 30 days, $50,000 is going to be due. Now pause. That's okay. I just told you to get the card. I didn't tell you to max it out. Come on, somebody, right? But having that trade line on your business credit report is going to give you a strong business credit score, strong business credit profile, help you qualify for more money faster. Got it, good, guys. All right, so the fourth kind of account, guys. So for the corporate card, I recommend you have 2 to 3. 2 to 3, okay? And I'll do like a summary at the end of how many cards. All right, so the fourth kind, guys, is a retail card. Now, you want to have those first 3 categories first, right? Because that's going to help you have a profile and score before you can even qualify for some of the retail cards. Because the retail cards, depending on the company, are tier 2 and tier 3. Tier 2 and tier 3. Pause. From this point on, I cannot promise it is a soft inquiry, right? It's going to depend on the actual company. For many of the retail cards, like, Home Depot or Best Buy or Staples, or Amazon doesn't really, but, let's say like Lowe's, they are a hard inquiry, okay? So I didn't say all of them were soft inquiries. I'm telling you what kind of cards you actually need, okay? So ask them. Sometimes if you have a personal Home Depot, then it may not be a hard inquiry for a business Home Depot. If you have a personal Lowe's, it may not be, right? So when in doubt, you are a business owner, you are a boss, you are a wealth warrior, pick up the phone and ask. But the fourth kind is a retail card. I recommend you have 2 to 3. 2 to 3. Again, this is revolving credit in your EIN reporting to the business credit bureaus. Now, nugget right here, guys, get accounts that you can actually use. So if I am a real estate investor and I do Airbnb, I may get a retail card, I may get Home Depot, I may get Lowe's, I may get Best Buy, so I can get electronics and things in the property. Does it make sense? If I am a content creator, maybe I'll go for like a Staples or like an Amazon, so I can get cameras and laptops and lighting and things of that nature. Let's say that I am a consultant, then I may get, things like the Walmarts, or I may get like in Amazon, so I can get like furniture and fixtures and all of those things, right? So be strategic. Think about the type of business you have, what kind of business credit would help you grow your actual business, so you're using what? Less of your own money. Pause. Please please share, please comment, because this is stuff that people do not talk about, but I'm giving you what the lenders are looking for, and you can do some of this right now. So if you're somebody who's been building business credit, you're like, oh wait, I don't have any retail cards, I don't have any corporate cards. Guys, having multiple trade lines in different types of accounts is what makes you, the actual business entity, look financially stable, makes you look like you know how to manage your money, and it helps to show that other lenders have given you actual credit, even if you don't max it out. Having the unsecured revolving trade line in your business's name for pointing to the business bureaus is a nugget. Come on, somebody, okay? So 4 corporate cards. Now the fifth type of account, guys, is gas cards, fleet cards. I recommend that you have 2 to 3. 2 to 3. Now, the majority of the fleet cards are soft inquiries, but not all. So, for example, a WEX or a Murphy USA are soft inquiries, but a business fleet card like, Exxon or Wawa or, 7-Eleven or, Gulf, some of them are hard inquiries. Nugget. Business credit is fluid, right? It's not like rigid, like with personal credit where everything is like one way. So go on their website and see if it says hard inquiry or soft inquiry, or when in doubt, ask them, right? But the things like, a WEX or like, a Murphy USA that you can get regardless of how long you've been in business, regardless of personal credit scores, regardless of your revenue, that is wise. Get the things you can get right now, even if you don't have any revenue, to make your business look strong on paper. Come on, somebody. So you can then qualify for the equipment financing, the term loan, the business auto loan, the business mortgage. Got it? So for the gas cards, I recommend you have 2 to 3. And obviously you can use that, right? You get discounts on gas, you can use it for oil changes, tires, all those things. Okay. And the 6th type of card is obviously business credit cards. Now pause. I want to say something right here. You didn't hear me say anything about a business loan. You didn't hear me say anything about, equipment financing for these actual 6 type of accounts. Why? Because loans, as soon as you get them, you have a payment that's due right away. Guys, I gave you all revolving unsecured trade lines that are different type of accounts that you use for different things you can use in your everyday life that report to the business credit bureaus that will help you get a strong profile, strong score, strong report. Now, why? Because you can have a $50,000 business credit card, and if you're not using it, nothing's on there, you have no payment. Come on, somebody. The goal is to build wealth, not to get into debt. I don't want you to get a business loan. You have no use for the money, and now you just added a bill every single month, and you've put your major situation worse. But you can have a business fleet card, a business retail card, a business corporate card. And if you don't have a use for it right now, you don't have any balances. Don't have any balances means you don't have any monthly payments, right? You're only getting monthly payments when you're actually going to put it to something, to use for something that's going to help you actually generate additional income, right? So credit cards, I recommend you have 3 to 5, or look, 3 to 5. So it's going to depend, guys. I will link my video that I did about, EIN hacks, right? How you can kind of go through some hacks to help you get business credit cards. A lot of them will be a hard inquiry on your personal. So it depends, right? Ask. And then this is also where I'll link my videos on like retail cards and some of my the tier 1 and tier 2 accounts, guys. So you got the tier 1 accounts, that way you can go through and only use accounts that are going to help you. For example, let's say you are a consultant. Well, you may not need a Granger account, so don't get one. But maybe you do need a business plan to qualify for grants or qualify for loans. Well, then I may get a tier 1 a wise business plan account. Guys, think about what you're doing. The goal is not for you just to spend a bunch of money and waste your time. The goal is for you to build wealth and to leverage your EIN, to actually get, revenue to help you build and grow your business, right? So I recommend you have 3 to 5 credit cards. But when you go through those other cards first, then those other accounts, that is going to help you then qualify for the business credit cards, which you can get regardless of revenue a lot of times, right? So you can, even if you're like, a single member LLC, put, your household income or the income that you actually make, right? Because you can still verify that you are generating income and you are a single member LLC. Come on, somebody, there's levels to this. Now, if you don't have any idea what I'm talking about, go ahead and go to the description of my video and invest in a Jumpstart strategy session so I can break this up for you. But guys, I want you to action item, right? Look at the kind of business credit account you currently have. Who do you currently have credit with? Where are the gaps? You have 2 vendor accounts and 1 corporate card and 1 gas card, but you have no credit cards. You have no retail cards, right? Like, pay attention. So go through and what accounts do you currently have? That's step number 1. Number 2, are they reporting to the business credit bureaus? Guys, if you have 10 accounts, this is not super hard, right? If you have 10 accounts, call 1 Monday, 1 Tuesday, 1 Wednesday, 1 Thursday. Do you report to the business bureaus? Have you reported to the business bureaus? What bureau did you report to? Okay, you didn't report yet. What do you need from me? Ask them directly. Stop guessing. Contact your creditor. Say, hey, I have a net 30 account with you. I don't see it on my business credit reports. When are you going to report it? And they will tell you, right? So break it up. If you have 5 accounts, do 1 every single day so you're being productive, but you're not being overwhelmed. So let me recap for you guys and stay around for my nugget. So for number 1, I said have vendor, tier 1, and net 30 accounts, at least 4. The second type of account I said is a NAV business boost. The third type of account is corporate cards. I said 2 to 3. The fourth type of account, I said retail cards. Again, 2 to 3. And then I said number 5, the fifth type of account is a gas card, right? 2 to 3. And then for business credit cards, 3 to 5, right? And you want to have those other accounts reporting to help you actually qualify for that. Does that make sense? And this is where a lot of the business credit cards are what? 0% interest for 6 to 18 months. Higher level nugget. Maybe you're getting a card to put on Turo. Maybe you're hiring an assistant. Maybe you're getting better equipment. Maybe you're a personal trainer who's getting equipment to put inside, your home gym so you can charge more money. So that way you can actually have the money to pay that back and then, multiply and have a profit. There's levels to this, okay, guys? So getting these 6 type of accounts are going to help you build business credit scores, business credit profiles, help your business credit reports, and help you qualify for then the unsecured lines of credit, equipment financing, auto loans, mortgages, all of those things, term loans. Got it, good, guys. And for my nugget, guys, there is a gap. There's a gap between what you're saying out of your mouth that you want and what you're actually doing. This is where, God can't give you what you want if you're double-minded. So you can't say, I want to be healthy and lose weight, and every single day, you're eating, French fries and ice cream and you don't work out. You're saying you want to be healthy and lose weight, but your actions are saying something different. Come on, somebody. You can't say I want a healthy, successful relationship and you're a liar and you're a cheater. Well, you're saying, I want my wife to love me. I want my husband to love me. I want a great relationship, but you're a liar and a cheater. You can't say, I want my friends and I want people to be loyal to me, but you ain't loyal. You're a backstabber. Come on, somebody. You can't say, I want to be a 1%er, but then you don't read, you don't tithe, you don't have a coach, you don't invest in trainings and webinars and courses to level up. You're not around in an environment with other 1%ers. You can't say, I want to be a multi-millionaire, and you spend your money frivolously. You don't look at what's coming in and what's going out. You've changed none of your money behavior. I want to be a multi-millionaire, but every time there's a sale, you're out there shopping. You're not reinvesting your money. Come on, somebody. You can't say, I want to be a self-employed entrepreneur, or I want to start a business, and every time you have free time, you're taking a nap. You're, binge watching Netflix. Y'all, this hit home for even me. There's a gap between what you're saying out of your mouth and what you're actually doing. So pay attention. Do a self-assessment. Leaders, bosses, they're able to self-assess. What are my goals? What have I said out of my mouth I want? And then what am I spending my time on every single day? What am I doing every single day? Are my actions in alignment with what I've said out of my mouth that I want for my life? If not, adjust. Start from today. Amen.